that rand, trading around 671, 672. So getting a bit of strength back after yesterday and holding quite steady this morning.
Yes, indeed. Yesterday we saw renewed dollar weakness on the back of Bernanke's comments about the US economy. And we also saw South African Reserve Bank data showing that the South African Reserve Bank's accumulation of dollars has slowed. And this really saw rand base run out of momentum just shy of about 682. And judging from yesterday's dismal performance on the equity market, participants seem hesitant to put on risk quite aggressively. However, given the fact that the US interest rates seem or is likely to remain at historic lows for some time, it is doubtful that risky assets will sell off aggressively. We therefore see that the rand is likely to remain stuck at the lower realms of about its 6-month trading range of about 654 to 708 in the near term.
Well, how did you read those comments from the Fed Chairman Ben Bernanke? Because not really saying anything about more monetary easing, but of course the market seeming to read into the fact that we are going to have this accommodative monetary policy for longer.
Indeed, he did mention that an accommodative monetary policy stance may still be necessary, but that doesn't really necessarily translate into the fact that a further round of quantitative easing is necessary. So the labour market data really still seems to be soft, and indications are really that the US economy is still fragile. So an accommodative monetary stance is probably what we're likely to see for some time.
Well, there's nothing much on the radar here in South Africa or globally, in fact, today. So would you expect the rand to continue in this range in the short term ahead of, I think tomorrow we have ECB rates decision. We also have some local data tomorrow.
Yes, I do believe that we could be trading in that range, as I mentioned before. But given the fact that we have the mining production data, manufacturing production data out tomorrow locally, we could possibly see the rand come under some pressure given, well, not given that, but rather on the back of the fact that we expect mining production as well as the manufacturing production to have eased during the month.
Well, yeah, the last manufacturing production number, 4.6%, that was for March. What's your expectation for April?
We're seeing some softness with manufacturing production possibly moderating to about 2.4% year-on-year in April. And if you look at what has been happening with the PMI data, we're really taking some cue from that. We saw the PMI moderate in both April and May with additional pressure coming through from the employment subcomponent as well as the prices index. So we do expect some softness in the manufacturing data.
Any surprises expected from the ECB? Because previously it was felt that they would keep rates on hold, now potentially rising in July. What's the impact of that for the currency market?
We don't expect the ECB to raise rates. We expect it to keep rates at 1.25% for some time, well, at least until next month possibly, although there has been some indications that the risks to that or rising interest rates are starting to increase. But also if you look at the BOE data, I mean, there's the BOE is also meeting tomorrow to decide on rates and is also expected to keep rates unchanged. There has been, well, at the last meeting, there's been a split vote of about 6-3 for an increase in rates, or rather keeping rates flat. But the UK economy still remains very fragile, even though inflation is starting to pick up. And if you look at the quarterly inflation report, it has reported that inflation could possibly tend towards 5%. So if the BOE or ECB do keep rates unchanged, we do expect the rand momentum to continue as is.